I'm curious as to how many of you have either heard of the Hurst Exponent before or already are using it in your trading. Using it with or without harmonics doesn't really matter. The Hurst does not necessarily have anything to do with harmonics, although I find it very, very useful in conjunction with harmonics. But they can and are used in many other ways, or it can be and is used in many other ways by many other methods than just harmonics. Oh yeah, sorry about the delay in getting started here too. My apologies, it was my fault. I just got in on a super delayed late flight. Confused about it, I'm not sure how to use it. Okay, so some people have heard of it, some people haven't. Pretty mixed bag here. No, FIFO didn't change anything. Futures have always been FIFO. I grew up trading futures, so it was no big deal, no shock to me. Nope, back in Florida. All right, so Hurst Exponent. The Hurst Exponent is a derivative or a piece, if you will, of the greater concept known as chaos theory. So many of you have heard of chaos theory. Many of you have heard of the butterfly effect. Chaos theory is no more of a theory than gravity is a theory. So let's clear up the word theory right away. Anybody have a problem with the word theory and think theory means it's an experiment or that it's unknown? That for something to be able to be allowed to be called a theory means it's proven. It doesn't mean it's just an idea. A hypothesis is an idea that's unproven. A theory has been proven. Okay? So, just to clear that up, first of all. And that's not my opinion. Look it up. Theories have to be verified by independent third parties to be able to qualify for the word theory. It's a very coveted thing. There is no such thing as truth. There is only theory. So, anyway. So, like I said, chaos theory is no more is theoretical as much as gravity is theoretical. Anybody who wants to fight gravity, good luck. Anyway, so chaos theory tells us some very basic things. Everybody's heard of the butterfly effect and the metaphor. It is a metaphor. It just says butterfly flaps his wings in Asia and it starts a hurricane in the Atlantic. What that really means is small little things can have an effect on the entire system over great distances. It's kind of the simplest way to explain it. Now, the technical definition of chaos theory is sensitive dependency on initial conditions. So that's a very simple sentence, but it's also kind of a mouthful in terms of ideas. Sensitive dependency on initial conditions. Every single one of those words is really important. Sensitive means every little thing matters. Dependency means there is history, there is memory. The past influences the future. Sensitive dependency on initial conditions. Initial means that your starting point matters, and conditions obviously means conditions. What's going on in the moment also matters. So that's what chaos theory in a nutshell is. It's proof that the past does influence the present and therefore the future. Proof. Mathematical proof. Now that may sound simple, and it is, but there's a lot of people who want to, argue that this stuff is still a hypothesis when in fact it's a theory, which is not, when most people don't, like I said already, don't understand what the word theory really means. So anyway, if all of that is true, if sensitive dependency on initial conditions is a fact, is a mathematical truth, is not truth, is a mathematical provable proof, then there has to be a way to measure those things. Right? There has to be a way to measure the sensitive dependency on the initial conditions. In a nutshell, that's what the Hurst Exponent does for us, especially with regards to trading. So, it's the only indicator I use, as you can see, outside of the harmonic patterns themselves. And it doesn't tell me direction. It doesn't tell me where the market's going next. Nothing is going to ever tell you that, except for somebody that's going to sell you something on ClickBank for $67. Anyway. Nothing intelligent is ever going to tell you that, because it's not possible to do that. So the bottom line is the Hurst is always going to be a number between 0 and 1, or should always be a number between 0 and 1. 0.5 represents theoretical randomness. Not really randomness, because that's even a hypothesis. Randomness isn't even a theory. It's a hypothesis. The readings below 0.5, from 0 to 0.5, represent anti-persistence, which I'll talk about in a minute. And then 0.5 to 1 represent persistence. And anti-persistence and persistence are not, excuse me, are not like a bunch of psychologist stuff or head shrinker stuff. They're actual mathematical things. So, questions so far? I've already thrown a lot at you. Anybody have any, oh wait, what's this? Did you know Obama ended reading? Oh, really? Really? Are you guys joking or serious? Because I didn't pay attention to that. Did Obama really give somebody the finger? That would be awesome. It really would be funny. Okay, anyway. Moving right along. Alright, if there's no questions so far, I'll go on then. So, the Hurst tells us when it's below 0.5, and it's much easier to see when you bring in more data. So here we go. Readings like this, get the crosshair here, are telling us, they're not telling us that the market's going to go up. They're telling us that whatever has been happening is not likely to keep happening much longer into the future. Anti-persistence. That's what readings below 0.5 essentially mean. The more extreme, obviously, the better. So it's not telling you the market's going to reverse or the market's going to go up or down or sideways. It's simply telling you whatever has been happening in the recent past, over the course of the last 5 to 10 bars, is no longer likely to continue happening much more into the future. Conversely, readings above 0.5 are usually trying to say the opposite. Whatever has been happening in the past is likely to keep happening. And go out to a daily. This will probably look a little better. So, for instance, and I just randomly picked the Euro daily here. We can use it whatever charts you want. I'm not cherry picking. Very extreme Hurst Exponent readings. The market had been in an extreme downtrend for many months. And it was telling you in no uncertain terms what had been happening, i.e. the downtrend, is no longer likely to keep happening much longer into the future. It did happen a little bit longer. It did go a little bit lower, but ultimately it did signal us early in advance that this downtrend was turning. It was over. It was ending. It was losing its ability to maintain itself. And it's not an opinion. That's the beauty of this thing. It's a calculation. Now, let me tell you a little bit more about the history of the Hurst, I guess, before I go into the actual mechanics. Because the history is kind of interesting. The Hurst Exponent was not invented for trading at all. And this is an important thing, too. 95% of all the indicators you're using out there were invented by man, which, quite frankly, at best makes them questionable. This Hurst Exponent, on the other hand, was not invented by man. It is a discovery in nature, just like chaos theory. We didn't invent chaos theory. We discovered it. It was always here. We just finally became intelligent enough to realize it. That's what a discovery is. Something that was always already there, long before man even walked on this rock. Conversely, an invention can be anything. You realize the patent office in the United States is filled to the gills with worthless inventions, worthless patents. The vast majority of the inventions that have been made by man are worthless. So, personally speaking, if it was my money, and it is, I wouldn't use anything that was created by man. I only use tools that are discovered and verified in nature through other scientists, through other biological data that can be verified. So that's what this Hurst exponent is. That's why it's the only thing on my charts, because there's very few other indicators that you can actually verify in nature with a third party. So anyway, the Hurst was discovered by a man named Hurst, H.M. Hurst, or H.E. It doesn't matter. You can look it up. He was a hydrologist in the late 1800s, early 1900s, working for the Queen of England. He was the senior hydrologist in charge of the Nile Dam project. And then those of you that are British, and I know there's a bunch of you in here right now, you know your British history, you know back then y'all controlled the Nile. And Egypt for that matter, but you controlled the Nile. And so he was put in charge of building all of those dams. Because back then the Nile used to be just crazy in terms of its flooding. So this is where where the Hurst exponent came from. It was discovered. What he did was the Queen said, okay, those of you who might know your Nile history, the Nile has a very known cyclical pattern of flooding. Every basically 10 years there's a fairly severe one. Every 100 years there's an extremely severe one, and every 1,000 years there's one that's just almost off the charts and practically wipes out anything that's standing in the entire Nile basin. So the Queen charged him with making sure that the dams would withstand the 1,000-year flood cycle, not just the 100-year flood cycle. So, which was, I must say, very intelligent on her part. So that's where he then had to go into, and remember, this is in the late 1800s, early 1900s. This is all pre-computer. This is all done the real way with pencil and paper. He had to figure out what would the absolute worst case scenario be for the flood cycle in the Nile, and then build the dams accordingly. And he did. And to make a very long story a little shorter, the Hurst exponent is the product of that work. That her putting him on that task forced him to make this discovery that is now known as the Hurst exponent. And it was originally, like I said, a tool discovered in and used for hydrologists built in the making of dams. So that's about as biological and third party as you can possibly get. I wasn't the one who applied it first. There's been many other people who've done this, but then I applied it to the harmonic patterns. But actually, Edgar Peters, I don't know if any of you have read any of his books, but Edgar Peters talks about the Hurst exponent in his chaos trading books. There is another exponent that was, this is an interesting, I'm not going to get into that, but there's another exponent called the Lupinov exponent that was discovered at the very same time by a Russian mathematician who did not know about Hurst's work, but they were both doing it literally at the same time. They published their work, their discovery, within, I think it's 6 months of each other, or maybe, let's just say a year and be safe. But it was really interesting that their work was almost the same, and neither of them knew about each other in any way, shape, or form. And they died without knowing about each other's work. It was discovered later that it had happened this way. Anyway, So there's another tool called the Lupinov exponent that you can also use. Both of those things, Hurst exponent and Lupinov exponent, are very closely related to what's known as fractal dimension. Benoit Mandelbrot in the late 70s, early 80s wrote his seminal work called The Fractal Geometry of Nature, which too was a massive discovery, a huge leap forward, the first new mathematics that we've had since Euclid 4,000 years ago, and that's not my opinion. You can look that up. Fractals are also as close to reality as we can get in terms of the way nature functions. And so fractal dimension, I don't want to get into all that. I don't think we have time for that. But the Hurst exponent, if you really want to do your own homework and look it up, if you start digging, you'll realize you'll end up running into these things. You'll see the Lupinov exponent, and you'll have to learn about fractal dimension. And to learn about fractal dimension, you'll have to understand fractal geometry. And none of it's hard. I failed every math class I ever took, and I'm not making that up. I'm serious. I was horrible at math when I was in high school and college. So that's kind of the history of where this thing comes from. It has nothing to do with trading. It's something that works in all nonlinear dynamical systems, because all nonlinear dynamical systems exhibit the same behaviors, and they're all measurable by tools that understand nonlinear dynamical systems. The market is a nonlinear dynamical system. So, okay, so back to the mechanics here. Low readings mean whatever has been happening is not likely to keep happening. That's anti-persistence. And persistence is, of course, just like the word persistence, whatever has been happening is likely to keep happening. So, where's my crosshairs again? Anti-persistence, again here. The downtrend was not likely to keep moving down, and it didn't. It ultimately turned. And then you have persistence here. What's been happening is likely to keep happening. Uptrends begins. Now, it's not, again, when they're low, it doesn't mean go up, and when they're high, it doesn't mean go down. That's one thing you have to get away from. This is not an oscillator. It can be high when it's low, and it can be low when it's low, and it can be high when it's high, and it can be high when it's low. That doesn't mean anything. It's simply a statement about is the past influencing the future, and if so, by how much? For instance, right now on this Euro Daily, the current reading is 0.51. Well, 0.5 is theoretical randomness, which means there's no bias. The past is not in any way, shape, or form influencing the future. At least not in a way you can't say it's not, but it's not doing it in a way that is either persistent or anti-persistent. It's just basically saying the market's probably going to drift. But that drift could be within a 100-point range. Doesn't mean drift within 5 points. Okay. So that's really the basics. What time is it? Yeah, that's what I thought. I figured I could get through that fairly quickly. That's really the basics of and the history of what this thing is. It's simply a way of measuring how much the past is going to influence the present and therefore the future. Yep, it's funny how, there's a theory in science called simultaneous evolution, and that's the Hurst exponent and the Lupinov exponent, and the way that they evolved side by side with no knowledge of each other is sometimes brought out as one of the examples of simultaneous evolution. When things happen around the planet at the same time in almost the same way with no knowledge of each other. Theoretically no knowledge of each other. That's kind of part of it. Does it lag? No, in fact, it doesn't lag at all. In fact, it's almost the opposite problem. The statement that I've learned to use about the Hurst exponent is often early, rarely wrong. It's usually going to give you an advanced warning, more so than lag. Much more so. Is there a time frame that works best? No. It works on all time frames. It doesn't really matter. And the reason it doesn't matter is because of fractals, because of the way a fractal functions. The market is just a fractal. When you're scaling up and down the different time frames, all you're doing is scaling in and out of the fractal. You're zooming down or zooming out. That's it. Nothing more, nothing less. And you're going to see self-similarity inside the entire thing. You have to. That's the way the system works. Self-similarity. Nothing new under the sun. Well, on the daily chart, the Hurst right now is, like I was saying earlier, at 0.51 tells me to go surfing, which is exactly what I'm going to do after I get done with you guys. No, I'm back in Florida. Oh, the current, that's just a bridge back to them so they can watch my trades. It's not really an EA. It's just a link. And I don't even have it turned on. Actually, I need to uninstall it. But not right now. Yeah, I'm not surprised that you have a different reading. 0.4647. Forex is a decentralized marketplace, as you probably know, which means there isn't one price. Your data feed, whoever your broker is, I'm sure is different than the one that this one happens to be on right now. And like when I run this stuff on TradeStation or on any of the other stuff that I use, the readings are different too because the data is different. The sensitive dependency on initial conditions tells you that it would have to be different. You know what I mean? So yeah, there would be something wrong if it wasn't different. You know what I mean? Unless we were on the identical data feed, then it would obviously be the same. Okay, the principle again is sensitive dependency on initial conditions. How much is the past influencing the future? So here, when it was up here at the highs at 148 on this daily chart, you were getting readings down at 0.41. It's fairly anti-persistent relative to the recent past, too, going all the way back to the beginning of the year at that point. The Hurst was telling you in no uncertain terms that this uptrend that had been in place for however long it was, for 4 months, was no longer likely to maintain itself anymore. It wasn't saying it's going to turn tomorrow or in 5 seconds. It told you in advance here by 1, 2, 3, 4, about 5 days, about a week in advance, that the probability of continued upward momentum was no longer there. And it did reverse and pulled back and then chopped around. And you'll notice while it was chopping around, the Hurst was around 0.5, very close to 0.5 usually, between 0.45 and 0.55. And then here, lately, again, we haven't had much. Here, this thing was telling you that the downtrend was going to continue. You see this spike up here to 0.6 almost, 0.59? It had already been coming down over the last 5 bars then. And it was telling you, hey, what's been happening is likely to continue happening. And it did. It continued to go down. And then when it got to this bar, you'll notice it went to 0.5 and basically said, hey, I no longer have a bias. So the probability of a sideways chop is likely. And we've essentially gone sideways since then. It's been a couple hundred points. It's been like 400 points. But that's the euro lately. It's just the way it is. So for trending, if the trend is your friend, then here's another great example. Notice here, when the trend was in place, this uptrend that we had in the euro back in early part of this year, you had Hurst Exponent readings that were consistently in persistent territory, telling you, hey, what has been happening, uptrend, is likely to keep happening. And it did. And then it started to go down and give you anti-persistent readings, and it did pull back here. And this is 42 to 40. It's 250 point almost pullback. And then sideways chop for a while. And then you had this last little burst, and it gave you the anti-persistent reading. All right, so If you want to look at it on other charts or something too, you can call it out. So let me look at your questions here. Will weak dollar or strong if the USD? If the US defaults, the dollar will go up. The current CA is nothing. It's just a bridge back to them so they can monitor my trades. And I don't even have it turned on. So if you were planning a reversal trade, it would give some additional confirmation. Correct. So with my Harmonics, you can, that's exact. I mean, most of the time they are reversal patterns. So like, so here's the euro on a 4-hour, and when we were in the PRZ, the potential reversal zone of this bearish Gartley pattern, the Hurst Exponent went to 0.40, telling you that this uptrend that had been happening was no longer likely to keep happening, and that we were the probability was now shifting to the favor of a reversal. You have that coupled with a harmonic pattern, and you have better than 75% edge. And you can see exactly what happened since then. Looks like a bird that got shot out of the sky. And then when it got to the bottom of this downtrend down here, you can see it got an even more extreme reading saying, hey, what has been happening is once again no longer likely to keep happening, which what had been happening at that point was the downtrend. So then it again told you reversal, and now we're kind of just chopping and slopping, and we're close to 0.5 again, close to 0.5 again relative to the past. Here too, I got down there, you see it was an extreme anti-persistent reading, and lo and behold, it did reverse on it. It doesn't happen every time, but most of the time. It works about 70, 75, sometimes even 80% of the time. And it's not saying reversal. It's just saying it could just have gone sideways here instead of reversed. It's not saying the market's going to reverse. It's saying what has been happening is no longer likely to keep happening. So there's two other options, because the market can only do three things. Two other options are actual reversal or just sideways. Where can you find this type of indicator? You can email me and I can send you a copy of mine if you want. Could someone use the persistence side of it for trend trading? Yes, that's what we just went over that. And yes, sometimes it's called IVAR. And yeah, mine has been definitely changed the name and modified it a little bit, but it's pretty much standard issue. We can go down the time frames too if you like. Oh, I'll reply. If I didn't reply to you, it's only because I don't like you. No, I'm just kidding. Right, what is my email address? I may have given you the wrong one. Did that show up? There we go. Second market wagers P1E. I think it's the second paragraph. I gotta look it up on I'd have to look it up on my own again. But he basically says it's the paragraph where they ask him, you just wrote blah blah blah. I mean, you just interviewed all these people, blah blah blah. What did you learn? What was the number one thing that you learned out of it? And he says the number one thing I I got out of it wasn't some super secret trading system, blah 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 blah. It was realizing what I've said, that every single person who was successful had a system that fit their personality. So there's a couple of keys in there. Number one, they had a system. And number two, they knew who they were personally. They knew their personality. They knew what they were good at, and most importantly, what they're bad at. And they focused on what they were good at, not what they were bad at. You don't try to improve the things that you're bad at. You just focus on the things that you're good at and farm out the things that you're bad at. Whatever. That's what I was referring to on page 181. And page 181 may be wrong because that's on PDF. It may be different in the hard copy. I'm not 100%. I gave my hard copy one away years ago. I know the answer. What is it called on TradeStation? It's usually called just the Hurst Exponent. It's not it's an add-on. You got to buy it. It's not one of the defaults. What is the significance of 0.5? 0.5 is, like I said, theoretical randomness. It's basically saying that the past has no bias over the future or over the present and therefore the future, neither persistent or anti-persistent. It's not saying that the past is going to influence the future positively or negatively. It's just telling you to go do something else. When markets are at 0.5, it's time to go surfing. It's time to go do something else. Because probability is not on your side. And that's another thing I think a lot of people don't realize is just because the market's turned on doesn't mean there's an opportunity to trade it. Movement means risk, not opportunity. Opportunity comes from probability, not movement. Risk comes from movement. If you had a nice harmonic setup but a Hurst exponent was over 0.5, would you still take it? That's a great question, and the answer is unlikely. There are some rare occasions where that is okay, but they're very rare. So the easier answer would be to just say no. Will Fed give QE3 another name? I don't really follow that stuff. Don't know, don't care. Won't affect my trading either way. And yes, it's very similar to fractal dimension. But see, fractal dimension is, well, I don't know if we need to get into that. Different. A little different. The Hurst is just measuring the past's influence on the present. Fractal dimension is actually trying to calculate the shape of the fractal at that moment. Because that's what fractal dimension really is. It's a shape. So it's a little different, but in practice, the way you can use it is pretty similar, yes. Well, probability is more and more on your side the more extreme the reading gets. Above 0.6 or 0.7, yes, that would be that the past is likely to continue influencing the future positively. So whatever has been happening is likely to keep happening. So if you're in an uptrend, probably going to continue trending up. If you're in a downtrend, probably going to continue trending down. If you're in a sideways trend and you get high exponent readings, probably going to keep going sideways. Because it's telling you that the past is positively influencing the future. It is persistent. Or it's the present. I don't mean to say the future. It influences the present and therefore the future. Secondly, do you believe each instrument based on its frequency has a particular FDI or Hurst value where it potentially reverses? I know what you're saying. I've never taken the Hurst to that level to calculate. I have another program that does actually calculate the frequency of each market, but not just each market, but each market within each time frame, each level of the fractal. But anyway, but no, I would not. How do I say this? Yeah, you're probably right, but I haven't taken it to that level, and I don't think I need to use this efficiently. But if you do the research, please. And is GG Gordon Gecko, by the way? If you do the work, please share. Nice. I've only seen the second one once, but the first one I've seen probably, no BS, 100 times. I don't think I've seen any other movie except for maybe Blazing Saddles more than that. Oh, genius, you're history is going to be called Chapter 11. Nice. I heard China was filing a 13D. I don't know if anybody gets that. Anyway, 0.4 or lower. Lower the Hurst value, more probability for fractal price to reverse. Again, it's not calling for reversals. It's saying that the past is no longer going to persist. So, what's this? This is the Euro 15 min. And I know we're doing this in hindsight here, and so hindsight's always 20/20, but here's very anti-persistent reading. Where is it? You had, the way I didn't tell you this part. The way this is comparing the 5, or at least the way I have it set up. This is comparing, and you can change it. The last 5 bars to over the last 1,000 bars, whatever time frame you're in, whether it's days or hours or minutes, doesn't matter. So it's looking at and it's like an exponential moving average in that obviously the 5, the present, is more influential than the distant past. Chaos theory tells us that too. The distant past does influence the present, but not as much as the recent past. So you have it sort of exponentially weighted in the way it's calculated. So 5 over 1,000. All right, so yes, the Hurst I use it to forecast. Forecast the likelihood of persistence or anti-persistence. Again, I don't use it to forecast direction. I use other tools for that. Harmonic patterns, in particular. But it tells you where probability is. Is probability on the side of the trend being your friend or not? Like it says, size does matter. And if you want a copy of the Hurst, you can find it on Google, but you can also just email me directly, and I'll send you a copy of mine. It is MT4, and you can use it on any time frame. It defaults to 5. All right, so I'm going to have to wrap it up here in just a couple of minutes, if I'm not mistaken. And have I skipped anybody's questions? Have I answered everything? What have I tried to make sure I've tried to hit it all? Hit me with whatever last-minute questions you got. What do you use or find harmonic or finding? What do you use or finding harmonic? I guess I don't know what the question is, but if you're asking what I use harmonic patterns. These babies, bats, butterflies, gartleys, crabs, you name it. Here's a really nice little butterfly pattern that's been playing out in the in the Aussie Kiwi. You can see here it's been very anti-persistent for some time. Now it's actually starting to go into persistent territory, which would be good because it's been uptrending. So it's getting to the point where it's going to start saying that the uptrend is likely to continue, which would be good for follow-through back up to the B point here. Okay, yeah, we got to finish it in 2 minutes. That's cool. Well, this really is the butterfly indicator, I would have to argue, because it's essentially measuring the butterfly effect. So we could rename it to the butterfly indicator. I like that. Oh, you're talking about the patterns, the butterfly. Oh, here, FX Pro. This is what I'm selling. If you want access to the patterns, you can get them at that link. And if you want the Hurst Exponent, you can email me here. Otherwise, thank you, FX Street. Sorry about the delay in getting this thing started. But thank you for allowing me to present it to you guys. I hope it was... sorry, let me type in my email address.